Good morning, traders. It is Monday morning in Chicago. It's 9:02 a.m. Eastern U.S. time on the 23rd of October, 2017. Thanks for joining me again. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance this morning, everything is higher except for gold. Gold trading at $1,274.80. It's the laggard today, down 0.45%, followed by the euro. The euro's down to 117.70, down 0.38%. Crude oil's leading the pack, just twisting and turning again at 52 in the 52 handle, 52.10 currently on the December contract, up 25 cents, 0.5%. The U.S. indices, also the European indices, are all higher by anywhere from 0.12% or 3 points, three handles in the EM, all the way up to the Euro stocks being up 13 handles or 0.36%. So looking like allocations to risk this morning, the market's feeling good about itself and is heading higher. Seeing as it's a Monday, a quick overview of what we're expecting today. We'll get consumer confidence in Europe at 10 a.m. We also got speakers like Hannon and Prait overnight, came in at 3 a.m. Eastern. These are all Eastern times. Again, Eurozone consumer confidence at 10 a.m. Eastern time. That's the only number that's on deck for today. Tomorrow, German, Eurozone, and U.S. manufacturing and services PMIs, ECB's bank lending survey. On Wednesday, we get the Bank of Canada rates. The UK releases its GDP and index of services. The US gets durable goods orders, FHFA, and new home sales. On Thursday, we get ECB, the ECB and lending facility announcements. ECB's Draghi speaking at the monthly press conference, and U.S. jobless claims, advanced goods, wholesale inventories, and home sales. So Thursday is a heavy day. Friday, we get German import prices, U.S. core PCE, GDP, University of Michigan on Friday. Okay, so that's where we stand as far as what we've got. What we had on Friday, it's kind of difficult covering two products equally at the same time during the broadcast. But what we did on Friday is we looked at how the market is positioned in the ES and in the Russell. We had a gap up. The primary expectation is for the market to move down, to trade sideways, open auction out of range, to move down slightly, but to ultimately push up and hold near highs for almost the entire session. But look out for, I said we should look out for covering or rebalancing by the end of the session. What the market actually did, and that's basically what happened on Friday, what the market actually did was this. This is a 15-minute. See an open auction taking place right here. The market then moves down. It reaches pretty much the 50% of the gap that I've talked about in the past, and we get the push up. The impulse is up. Then it goes sideways and closes at highs with the point of control. With the point of control at highs. And that's leading us to an interrupted auction to the upside, and we're likely to continue higher. And we have the overnight session pushed the high to 25.77 and a quarter, currently trading 25.77, and that's where we stand. We left a gap zone behind, okay, as outlined here. The gap zone behind. The market is just very bullish still. As far as looking at the big picture, here's a day session only or pit session only. This is how we've traded so far. We went through this really good period of trading here with good tests lower. In 2005, we had Some surprises in 2016, 2015, and 2016. We had some surprises, and then late, right after the election night, right here, we've basically been in this strong uptrend as the market anticipates a Congress and an executive branch of the U.S. government that is very favorable towards taxes and business, and so there's a lot that's there's a lot that's being priced in. The gap up on Friday was based on the passing of the 2018 budget. So this is where we are. We're in a steam roaring bull market. It is not definitely for my style of trading. It is not that much fun to trade, but overall, we see that volume has been pretty good. It's right there against the point of control of volume, the most common volume, which is about 1 million, usually it's about 1.1 million contracts in RTH per day. We were right up that on Friday and Thursday. The days before that, if you note this blue line, we've been trading right at or below value low of volume. In other words, we are trading outside of what we would consider to be normal. That's how things are shaking out. So that's where we are. As far as the overnight, man, buffering. Sorry about that. I just don't know what the deal is with this buffering. It's really annoying. I've reduced the resolution to 720 to cut back on that, but it doesn't seem to be helping very much. Um, I think whenever I'm broadcasting from home on my Comcast cable connection, we get this buffering issue, so I apologize for that. We opened this morning very strong. The first 15 minutes, the market popped up, went sideways. We've traded basically at the high early on, 25.77 and a quarter put in very early on. And then all we've done is basically traded downwards from there. We've popped up and we've retraced that pop um, all the way down to the low. And now we're pushing against highs. So what we have here in the overnight is a pretty good amount of volume on a bullish pattern, on a bullish pattern. So this is what we're seeing. The target above is the measured move at 25.80 up here, 25.80 and a quarter. It's a single measured move, unlike the doubles that we had last week, and it looks bullish on today. Now we still have that gap below us to fill in, and the market has not retested that yet. But we're pushing higher, and we're likely to continue to test upwards and continue to hold higher prices. I'm not seeing a catalyst for this market to actually decide that it's found its sellers. It keeps advertising higher prices and continuing to find buyers and not able to find sellers at the moment. And that's just a fact. That's just how it is right now. Which means we're in new all-time high territory, which means that the trade is likely to be slow and the VIX is likely to go lower, and it is what it is, right? So with that being said, let's take a look at what's expected for today. The expectation for today, again, open auction out of range, new all-time high territory. I expect it to push higher initially, and then I'm looking for it to rebalance the overnight imbalance higher, looking for it to rebalance. I'm looking for today to come back into 25.73 and 73, hold sideways, and then later on come down towards, but probably not get this 25.70 LVN that we left behind on Friday. I'm expecting more of a downwards motion today in the action. So that's our scenario number one, is for the market to see some exhaustion and to start to rotate down and hold the upper end of Friday's range. That's what I'm looking for. So I'm looking for signs of exhaustion early on, looking for failed tests higher and then hitting the bid, and looking for rotation back to 25.73 from approximately 25.77 or so, 25.77.78. Okay, that's the primary scenario. Secondary scenario, open auction, drifts down, moves into 25.73 even, and then we're looking in that scenario, we're looking for an impulse up. Okay, so the biggest rotation being up, pull back, consolidate, and then continue higher, and then finish lower in the day. Finish basically where it opened. I'm expecting today to end up being on the daily chart, expecting that candlestick to look like a doji today. So that's what I'm looking for on scenario 2 in this product. Okay, so let's take a quick look at what we expected for the Russell. The Russell, the primary expectation was for it to test higher and then to fail lower and to consolidate lower, because it is in a downtrend versus the ES. You could see that for days and days and days, this thing has been in a downward channel, as outlined by this channel that I put up a few days ago. That's the primary hypothesis. The secondary hypothesis: test down, test up, hold in the middle. The Russell actually had an exceptional day on Friday in that it just didn't go anywhere. Really, this is a product that really moves. It didn't go anywhere on a very tight range. It went from 1514 down to 1509 or something like that, and it was relatively tight in range. But more importantly, it did not break the initial balance high, nor did it break the initial balance low, which only occurs about 4% in the data set historically. So it kind of did, it kind of looked like it was going to pull off a scenario 2, but it ended up not going anywhere at all. And you notice that today we are opening in range in the Russell rather than popping up above. It is opening higher. It closed near lows. So the Russell is a mirror image, a horizontal mirror image of the S&P. So if I extend this out, you'll see that it has two distributions right there and right there. The point of control is at the low, and it's finishing around that point of control on the day. With the ES, we have basically the opposite look. The ES, two distributions, finishing up at the point of control on the extreme high. The ES had a normal variation day, meaning it broke only one side of the IB. So the Russell is still exhibiting weakness. I expect that the first responders to this, to any correction down, are likely to be the small caps. The small caps generally get hit first before the large caps, and benefit early when things turn. So the small caps generally, in my experience, have generally felt the effects of the economy before the large caps. The Russell is something to watch in that it's just not able to get off its ass and follow what the S&P is doing. And it's just, I see that as a tell, but a tell for what? I have no idea. Didn't go anywhere, didn't breach any of its high probability stats anyway. So the Russell expected to be an open auction, expecting a small test up, and then I'm expecting it to drift down back into the 1510 point of control. I expect that later in the afternoon for it to breach the low here, expecting the Russell to breach the low and to start drifting down in 1507. So for the Russell on the downside, I'm expecting a target of 1507. Expecting us to see 1507 today on scenario 1. This is what I'm shooting for today. This is the product I'm paying attention to. I'm really not paying attention to the S. I'm watching the S&P, but I'm not seeing the opportunities in it. So that's where we're likely to head. If it does not, if we get responsive immediately on the open and find a base here near the 1510 that I'm looking for to push up and not uh, test last week's high, but not be able to take it out. That's scenario two. I'm not looking for that to be the likelihood. The likelihood is much more to trade sideways or to trade downwards along with the rest of the market. I'm pushing I'm looking. My homework shows that there's more of a path of least resistance to the downside this morning, but that doesn't preclude me from actually taking longs if the market shows good rotations to the long side. Remember, your rotations are really important. Your rotations are really important, and so pay attention to that. Good luck today. Take care.